Hey everybody, it's Chris with Life 180, and Joe Biden just launched his proposal for new tax plans. And I'm a big believer, this guy, if this goes through, he's in the process of potentially crashing the markets and potentially ultimately saving the insurance industry all at the same time. I want to tell you why. Now, think about it this way. I want to go through and kind of outline the plan. And I think when I go through, and I've got a Bloomberg article that I'm going to just pull up, and I think it kind of outlined what was going on a little bit well enough to kind of explain all the different little nuances and movements in the plan and kind of like what the objectives are. And then once I go through that, I'm going to kind of give my explanation on why I think what's going to happen is going to happen. So let's get into this. I want to just share my screen real quick, and let's go. So you can see here that Joe Biden will propose almost doubling the capital gains rate for wealthy individuals up to 39.6%. That is huge. The wealthy people earning more than $1 million, that impacts America. A lot of people talk about the 1% and the 1% paying their fair share. Most people think of the 1% as the Warren Buffetts of the world, the Jeff Bezos, the Elon Musk's, those types of people. But the reality is people are in the 1%, earning, I think it's over like $400,000 a year or so. That number moves obviously year to year. The people that most people consider the uber wealthy are your Donald Trumps and, the people that have billions of dollars. They get all the headlines, and obviously we can't just tax them. Going after people that are making $1 million a year or more, that's really attacking the entrepreneur of this world. Going after people that are making incomes of $400,000 or more, that's not that hard to do. I mean, $400,000 of household income is not that hard of a number to hit. Now, I know that kind of sounds like maybe a crazy statement to some people, but the reality is $400,000 of income, if you start taxing them and disincentivizing that kind of investment in the market, what you're doing with that high tax is you're basically putting more risk on their investments, right? Because they need more certainty that the investment's going to perform, right? Because even if they do well, that's just going to be taken from them. So it's always a risk-reward equation. I'm going to do a different video on that because I think it's really important to understand. But let's get through this a little bit. So that means federal tax rates for wealthy investors could be as high as 43.4%. The new marginal rate of 39.6% would be an increase from the current base rate of 20%. So that's huge. That, for most people, by the way, capital gains, I think actually they're going to talk about it, but capital gains rates are going to be potentially higher than people are paying in income tax, right? So like that's crazy to think about. Like that capital gains rates should not be higher than income tax because you're taking risk to get the capital gain, right? So it's a massive penalty. It's a massive penalty. So on the news, the stock slid. I'm not going to get into the details on that. The proposal could reverse a long-standing provision in the tax code that taxes returns on investments lower than on labor, right? Yep. So that's what I was talking about. It's going there. They're doing this. Ultimately, it looks like to fund the American Families Plan, right? So this is just a bill that he's trying to create better infrastructure, that he's trying to get schools paid for kids, pre-kindergarten education. He's looking to do a lot of different things. $2.5 trillion infrastructure bill is also going to be paid for, called the American Jobs Plan. This is just, we're talking about money now. I think it's kind of dangerous with all these COVID bills that have thrown out $1.9 trillion for this, $1.4 trillion for that, $900 billion for this, $700 billion for that. Like these numbers are so astronomical and our debt is getting so out of control. I think the thing that nobody's talking about is like, how are we going to pay for all this? Like, you cannot just tax the wealthiest people of this country and think that that's going to cover and foot the bill. It's just not going to cover it. That's the reality of the situation. And so this is going to cause the moral hazards and the unintended consequences behind these actions of raising this tax rate. What it's going to do is it's going to disincentivize people from putting their money in the markets to take the risk. People are going to pull their money out because why keep your money in inefficient investment vehicle, because if you're going to get taxed at that rate, it just doesn't make any sense. You're taking on literally 100% more risk. I mean, if you were paying a 20% tax rate before, and now you're paying 40%, that's 100% more in fees ultimately on a successful investment. But not only that, if you have, let's say you go and you earn 10% per year. If you have 10% per year and you're losing 43% or just 40% in taxes every year for those 5 years, let's say it's a 5-year time horizon, and then year 6, the market goes down 20%. Did you know that that investor is barely even on those investments? Right? Like, so you could have 50% up and then one 20% year down, which is not outside of the realm of possibility at all. In fact, it's more the norm than it is the abnormal situation. And so that kind of circumstance just shows, why would anybody put their money in that kind of environment where they have that kind of risk? It's mind-blowing to think about. So GOP lawmakers called for repurposing previously appropriated unused pandemic relief funds to help do this. To pay for these things. Biden will detail the American Families Plan in a joint address to Congress on April 28th. So what I think is irresponsible here is he's coming out and he's saying he's doing all this, and he hasn't even told people what it's for yet. So it's like he's preempting it a bit. He wants to give an expanded child tax credit that would give parents up to $300 a month for children, or $250 for children 5 and under, and $250 for those 6 and older, right? So like, that's just, I guess there's all these things going on. Capital gains increase would raise $370 billion over a decade, according to an estimate from Urban Brookings Tax Policy Center in Biden's. So, okay, if that's the case, let's talk. If it's going to increase $370 billion over a decade, and that's it, the consequences of what that's going to do to the market, first of all, is catastrophic. But secondly, if that's all it's going to cover out of the $2.25 trillion bill that they're talking about equating this to, where the heck is the rest of it coming from? I mean, we're already almost 30 trillion in debt. We're already in, have an annual deficit when it comes to our budget. So what the heck are we doing here? I don't understand how they plan on making this happen. Here's what I have to say, and I'll just, there ought to be equal treatment for wages and wealth. Senate Finance Committee Chairman Ron Wyden said. He's an Oregon Democrat, the chamber's top tax writer. So he's, I don't understand how he thinks that taxing people, I don't understand in what world taxing people when they're taking risk to start a business, and when they're taking risk to invest in different assets that ultimately stimulate the economy. And when people are taking these risks, how you can tax somebody that's risking something at the same rate that you would tax somebody who just gets to show up and spend their time, earn income, and pay an income tax where there's no risk. There's zero risk. You know you're gonna get paid. You know if you show up and you do your job, you're going to get paid. If you show up and you do your job and you invest in yourself and you build your skills and you build your proficiency and you stick in the same thing for a while, you're probably going to get a raise, right? Like, that's the concept. That's the American dream, right? Like, you have the opportunity to grow, and so there's no risk, right? So how are we taxing now potentially the people who are the biggest producers in the society, that are ultimately what are the people who are allowing this country to grow still? How are we going to tax them at a higher rate than you're taxing people, as income tax, when they're taking on all the risk of this country? This is a huge problem. Now, here's the good side. For everybody who is wealthy, for everybody who is a life insurance agent or works in the fixed income markets or whatever with life insurance products like annuities, like whole life insurance, I know the IUL people are going to be all over this. I would caution them to be careful on how they structure those IUL plans and how they illustrate them and the expectations they put around them. But here's the deal. If you are in the life insurance industry, I think if this proposal goes through, Biden has single-handedly reignited the life insurance space, because what's going to come from this is there's going to be all sorts of new tax planning opportunities. There's going to be all sorts of new estate planning opportunities, trust opportunities. There's going to be such a huge need. Any household that earns over $400,000 is going to really need and want to take advantage of what permanent life insurance, when structured properly, has to offer. I believe that at the core of my being. All the people who don't see the value of whole life insurance, of permanent life insurance when properly structured, are typically the people that don't make enough money to really be able to leverage it properly. And so, they don't have the vision to see what it does. And now what's going to happen is every single person, especially at the upper brackets, are going to be taxed so high that the actual performance of their investments outside of these tax advantaged kind of plans that whole life brings to the table, they're not going to perform as well, and the risk isn't going to be as good. So now all of a sudden, a 4% guarantee, you tap on what it would take to get 4% outside of a tax advantage plan like a whole life policy. Now that person has to make 7% or 8%, and then to get taxed at 43% to get down to that 4% guarantee. And so now all of a sudden the net return is really all that matters, right? Not to mention there's no risk in the longevity and the sequence of returns, right? Because that's probably a too depth of a topic for this video. But the bottom line is, I think it's really important that people understand that this scenario is going to be really bad for the stock market. I think it's going to be really bad for the real estate market if this goes through. I still doubt that this will go through, honestly. If it does go through, I'll be shocked. But if it does, get ready. It's going to be Armageddon in the markets. I can't, I don't even want to know what it's going to look like. But he's going to single-handedly cause a market crash and a real estate market crash. That's going to open the door so much for opportunities for people to get annuities, for people to get whole life insurance. And if you are an agent, you need to be going out there and serving people, hone up, learn about whole life insurance, learn about annuities and where they solve problems. One of the things that I would tell you that you need to focus on if you have clients that are older is to insure their income, get the right kind of annuities, be very careful about the types of annuities and the riders and how you leverage the products to solve people's need. But SPIAs can be a great alternative for people to guarantee and lock in their income during retirement. I mean, life insurance, remember, life insurance companies offer two products typically that that they manage their books with. They have life insurance where the risk is you live too long, and they have annuities where the risk is you die too soon because they're insuring you. And then you have annuities where the risk is you live too long and they got to guarantee your income for a long period of time, right? So if you can get it so you guarantee people with an annuity that their income is going to be guaranteed for life, it's kind of like buy your income and invest the difference. I know a lot of people love the term buy, like the concept of buy term and invest the difference. Well, this is, imagine the concept of buying your income and then investing the difference. Figure out of your portfolio what you can do to guarantee that your income will be there. Avoid all the sequence of return risks, avoid all the market risks and the political risks and the monetary policy risks. You can even put inflation protection inside of these annuities and with riders and so on and so forth. So it's something to really look at. This just kind of came across my desk. I've been doing some stuff with my wife all morning. I come out, I see this news, and I'm like, holy crap, I gotta hop on here and just do a quick video. So anyway, I hope this finds you well. And anyway, if you have any comments, any questions, I'm sure I'm gonna be doing more topics, more videos on this topic over the next couple days. This is gonna be hot stuff. So if you have any questions at all, feel free to reach out. Just make a comment below. I hope you have a blessed, inspirational day. I'll try to engage with you with every comment that's made. So go ahead and we'll see you on the next video. Take care.